In most cases, the owners of small businesses do not spend a sufficient amount of time reviewing their financial data. It's possible that they don't believe it's worth the time because their company is on the smaller side, or it can appear as though it's merely something that's necessary for obtaining loans, financing, and investors. Others would view it as nothing more than terrifying. But here's the deal. You don't need to be an expert. It's just a smart business practice to swiftly look at your profit and loss statement, often known as P&L for short, as well as your balance sheet in order to comprehend the financial health of your organization. Let's speak about the different ways you can accomplish that. The profit and loss statement provides a summary of the sales, expenditures, and expenses that were incurred during a particular time period, often a fiscal quarter or year. Now, the purpose of this is to make a comparison between what you are maintaining and what you are losing with regard to your income. The profit is what you get to keep, and the profit and loss statement will make it very evident to you how well your business is doing. The income received by the business can be broken down into three categories: sales, gross profit, and net profit. A business's expenses include goods, commissions, variable, and fixed costs. In order to determine your net profit, you must first take the money you earn from sales, deduct the cost of stock if you are selling a product, and then deduct all of the other expenses you have. This leaves you with your net profit. Positive numbers result when earnings exceed expenses. Negative suggests you spent more than you earned. Beginning businesses often act this way. More charges are likely. If you can read and understand your profit and loss statement, you can sustain a positive trend. The balance sheet is another important document. Balance sheets reflect a company's assets, liabilities, and shareholders' equity at a given period. It shows a company's assets and debts. Shareholders and investors in larger companies need this information. They can calculate their ROI. It helps small business owners understand their assets and duties. It helps check that your assets and liabilities are covered. You can use it as a guide to buy business insurance.